But let's get another company, the same theme there. If you had put your money in Godrej Consumers 5 years ago, you wouldn't have to work a single day perhaps. Adi Godrej, the chairman of the Godrej Group, joins us now to talk about that. Mr. Godrej, good morning. At the fag end of the year, we are trying to... Good morning to you. We are trying to sort of, put together a list of companies that have been significant wealth creators for investors in the equity markets, and Godrej Consumers is one of them. But in the last couple of weeks, as we have all seen, there's been a slowdown in urban demand. What's your sense of how, not just for the very near term, but say for the next couple of years, do you think the growth rate that urban India has been seeing will significantly slow down for consumer products?
No, I don't think so. I think the FMCG sector will continue to do well. There has been a slight slowdown over the last couple of months. However, I feel that the very strong agricultural season leading to strong rural GDP growth will lead to growth in demand very soon. I think urban demand will also start picking up because, to my mind, we have seen the worst in the economy and things should improve now. FMCG has performed reasonably well over the last several years, even in years where the GDP growth has been slow. So we are reasonably confident of strong growth in the next 3 to 5 years too.
Morning, Mr. Godrej. This
Good morning.
Positive urban and rural growth, the turnaround in urban and improvement in rural growth you're talking about, is it a matter of hope, or are you actually seeing signs on the ground? Are your stockists and sales guys telling you that things have actually picked up?
No, even in the last quarter, we posted strong growth. Our Indian business grew at about 17%. Globally, our consolidated sales grew 23%. So yes, we have been growing well, and I expect to continue to do so.
Okay. No, I was just trying to get, if you clutch at straws, whether things are turning around in urban India. What's your sense?
I think it will turn around from this month onwards. I think clearly we are seeing even agricultural prices come down, except for vegetable and fruit. Almost all other prices have started coming down, and that indicates strong agricultural production.
For the next, say year or couple of years, what could or how much could the margin profile of the company expand? Because give and take all the fluctuations that we've seen in input prices, the margins for Godrej Consumers have held at around that 14-15% level. Is there potential for the margins to expand considerably in the next couple of years?
Sonia, it depends on how you look at margins. Internally, we look at margins before advertising costs, because advertising to us is an investment into the future, and generally all companies, FMCG companies, have realized that when they advertise heavily for future growth, it helps, especially in times when growth rates are relatively low. So we have been investing tremendously into advertising, especially behind our very successful new launches. If you look at the profit margin before advertising, our profit margins have grown in every quarter over the last several quarters.
No, the reason I asked is because in the international business you are facing some stress. Certain pockets, I understand, Africa, Indonesia, etc., you're getting affected by higher costs. So do you think that in your total margin profile, international margins could keep the overall margin picture slightly under stress?
No, our international margins are in very good shape. Okay. They continue to do well. Of course, we are facing problems in certain areas, especially when countries go into elections, like you mentioned, Indonesia. In Nigeria, there have been wage hikes. But wage is a very small proportion of our total costs. In Indonesia, for example, where the wage hikes were quite substantial, wages account for only 5% of our total costs. So we tend to pass them on.
Okay, Mr. Godrej, actually the trend in the last 3 quarters has been that you have been doing very well on gross margins, largely because raw material costs have been coming down, and you've invested that directly into your ad campaigns, into your advertising investments. Does that trend continue into the 4th and the next quarter?
Yeah, I expect so. I expect that the margins will continue to be reasonably good. Remember, it depends on competitive intensity, but even when raw material costs do go up, we tend to absorb them through better efficiency in manufacturing and sales, and we pass on some cost increases. Of course, the ability to pass on the cost increases depends on competitive intensity. But I expect that will continue. I expect our margins will remain good, and because we have invested tremendously into advertising over the last 3 or 4 quarters, I expect our future growth will remain good. Our internal plan is what we call 10 by 10. We expect to grow 10 times in 10 years, which is a CAGR of about 26%.
Yes.
And we are very much on track for that plan.
Yes, sir, we heard that from you. You all have taken a 30% stake in a salon, Blunt. Well, to some extent, you're perhaps a slightly late entrant into this. L'Oreal and maybe even Marico have gone down this path. But will you persist? Will you take more stake? And how is it improving your bottom line or even your sales?
Well, the purpose of taking this stake is to learn the salon business better, to be able to apply ourselves to the salon business better. We are not interested in actually taking stakes in companies and run them. We don't want to invest into services, but we do feel that this investment will help us learn how best to service our salon customers. And since hair color is a very big business for us, not only in India, but across the world, I think this will add a lot of value. And it's a very small price we had to pay for this stake.
All right, Mr. Godrej, thanks for joining us and giving us your views, and I hope your stock is the wealth creator for the next 5 years as well as it has been for the last many years. In case you were wondering, in March 2004, the stock was trading at 40 rupees and now look where it is at. We'll take a short break. It's still quiet for the market, but there is a bit of green on the screen. So when we come back, we'll get a check on the big queue that's lined up later this week, the FOMC meeting.
MCX Stock Exchange, India's new stock exchange, presents Bazaar Open Exchange.